got the monthly market update for the month of September 2024. Lowered mortgage rates provide boost, but affordability remains elusive. So we got the further reduction of interest rates in September by the Federal Reserve. So we finally had that Fed cut that we said we were going to have. Now, that doesn't directly impact mortgage rates, but it does. You know what I'm saying? It just does. So I think the market had already packed in a 0.5 point reduction in Fed rate. And that's what we got, was a 0.5 point rate reduction. So mortgage rates didn't really move all that much. And since the time of writing of this, mortgage rates have gone up kind of substantially because we had some economic data that came out that went against this narrative of, oh gosh, we need a reduction in the rate to kind of, prop up the economy and get things going. So this did not provide a positive end of the summer boost to the market. I mean, it's saying it provided a positive end of the summer boost to the market. Did it really? Double-digit increases in active and new listings and single-digit increases in median home prices demonstrated a tentative balance between the ongoing seller's market and newfound buyer confidence. Was there any newfound buyer confidence? I don't really think so. A scooch. Rates have come down a little bit. At one point in time, you could get, you get a mortgage rate at 5.5% a couple of weeks back, and 5.75%, but that's gone up since then. So, and you're going to have these ups and downs, and it's never going to be stable. So it's kind of like if you have a client and they're able to afford it at 5.75%, they're probably going to be able to afford it at 6%. Play that rate game with your mortgage guy and make sure you get locked in when they feel like rates are kind of at a low point. Experts caution that without deeper cuts to interest rates, housing affordability will remain out of reach for many would-be buyers. What you've had is interest rates that have gone from 2.75% or 3% up to damn near over 8%. I mean, just insane movement because you've got all this inflation going on. Inflation, which we were told was going to be transitory. How'd that work out? Your groceries cheaper now? Have they gone down in price? Yeah, no. So your inflationary numbers went up and prices have remained high, right? Along with real estate prices. So housing prices are still going up 5-6% a year, depending on what market you're in. It's crazy when interest rates have more than doubled. And it's wild. So you got housing affordability will remain out of reach for many buyers. Interest rates remain over double what they were just 3 years ago, 6.08 at the end of September versus 3 in 2021. This continues to have a major impact on affordability. With that and just pricing alone. I mean, you've just got to this point where home prices are so high on top of high interest rates that you've got this stagnated market. And also, what seller in their right mind wants to give up their 3% mortgage they're sitting on? They don't. So that's why you're not seeing as much, mobility within the marketplace as you normally would. You don't have the sellers. I'll sell. So number of homes for sale increased throughout the MLS area, 22 of 26 counties, seeing a double-digit year-over-year increase. Well, when you have very little inventory a year ago, doesn't take much to get a double-digit year-over-year increase, right? Just doesn't. 31.4% increase in the total number of properties listed for sale. That's great, but it hasn't moved the needle. Also, remember, you're coming off of some historically low levels of properties for sale. Under 1 month. That is unheard of. That is sold out. Anything under 2 months of inventory is essentially sold out. Because you've always got those dogs on the market, right, that are never going to sell. So when you're talking, you got 1.5 months of inventory, how many of those properties are really available, right? So that goes into the active listings. Added 8,500 new listings to the database, increase of 12.7. Okay, nobody cares because if those homes aren't selling, it's kind of a moot point because sellers aren't moving off what they've already got. And buyers are going, wow, I think I'm still going to wait for a little bit more lower of an interest rate. 5 counties with the highest increases in active inventory for sale were Douglas, Pacific, Clallam, Grant, and San Juan. All right. San Juan, some of these markets, if you have 3 or 4 homes come on, then you've got a 40% increase in your listings, right? You just small marketplaces. And some of these have to do with, they are in affordable areas. So number of closed sales increased by 1.9% year over year in September. Okay, so only 1.9% September, but normally the velocity of our increase in pricing is starting to come down after our early spring and summer run. So 1.9%. The real news there is that we're still at 1.9% increase in prices. Their prices are still going up. 11 out of the 26 counties saw an increase in the number of closed sales year over year, while 15 saw a decrease. Well, so you got 11 out of 26 increase. Last year, you had very few closed sales as well. It's been since July of 2022, you've had a slow real estate market. And by slow, I mean some of the slowest times that I have ever seen. And I've been doing this since the 80s. And I own an appraisal company. And the appraisal business has just been decimated. I mean, just not good. And that's because you've got all these people sitting on low mortgage interest rates. And they're not going to move off them. They have no incentive. Oh, let me buy something with a much higher rate at a higher price. That sounds like a really good idea. Overall, the median price for residential homes and condos was $635, an increase of 5.8% when compared to September of 2023. So there's your 5-6%, on the median. 3 counties with the highest median sales prices were King, San Juan, and Snohomish. The 3 counties with the lowest were Ferry, Adams, and Columbia, counties you've probably not heard of. But King, San Juan, and Snohomish. San Juan, super desirable and very few properties. So that always ratchets up that pricing in San Juan County. And so that's why you've got median home price in King County creeping up on $900,000. And in Snohomish, they're creeping up on $800,000. That's not affordable for a lot of folks out there. Need those interest rates to drop just a hair, just a scooch, maybe a point, maybe a point and a half, maybe 2. And then we'll kind of get back into some kind of range where people feel like they can pull the trigger. Until then, I think we are mid-October right now. I think what you're seeing now, you're going to have that bounce around of the interest rates throughout fall and into early spring. We'll be through the elections. Elections is another big thing you got going on right now. People are freaked out. Who's going to win? Well, the numbers you need to be looking at are these numbers if you're making a housing decision, not whether Kamala Harris gets it or Donald Trump gets it, because it's not going to have much of an impact on the market. We've proven that historically. But people are waiting, I think, until they feel comfortable. Is my guy going to win? Is my guy going to win? And then they're like, oh, phew, my guy won, or gosh darn it, my guy didn't win. I guess I should go back to looking at houses again. So you got that. You got some craziness going on in the Middle East, stuff that, making people a little bit nervous about what's happening. But I think come springtime 2025, you're going to see lower interest rates, and you're going to see some people probably start to jump back in the market that aren't in the market right now. There's a lot of buyers out there waiting. We'll see them jump in. It's a matter of when. So make sure you're subscribed, tune in, talking about this stuff. Thanks for being here. I'll catch up with you in the next one. Bye for now.